Good morning. It's 8 a.m., 11/16, November 16th, Friday, and this is the Gold Fix. Little coffee there. Okay, let's go through it. We have a lot. There's 3 or 4 posts I can make out of this. I tend to write novels, so let's try and be concise. Okay. All right, read the note at the top at your own time. We will be putting up more information later on. And you can read the admonition from Sister Agnes, my principal in grammar school. Okay, yesterday. Gold did not care. It didn't care that England was sinking into the ocean politically. It didn't care that Europe really cannot do without the UK. Gold didn't care that palladium was up. It also didn't care that silver was up. It remained in the range prescribed by, and predicted is not the right word, by Michael Moore's research. Again, I'm not paid by the guy. He's just good. I kind of put the range there on my, we're working with cash charts today. If you're looking at the December future, add 50 to 60 cents. They're converging. And the reason I like to work with cash charts is because it helps in my volatility analysis. Continuation charts, which are not imperfect, not perfect, are very good. And they are very good with markets like gold because the rollover is really a cash rollover, a cost of carry. But when you have products with seasonality, continuous futures charts can be a problem. And I will use the futures market to exercise trades, but I prefer working with the cash market. If you can't adjust, then you know what? Then trade something else. I will use futures from time to time, but as we go towards expiration, I like to work with the spot. All right. Gold respected technical levels like a charm. The question for active traders is, by active traders, I mean in this instance me, and hopefully you, if you're thinking, or you're wondering how traders think, is was gold lagging or signaling a sell to the other metals in terms of why didn't it rally yesterday or rally much? The macro question remains, and I have an answer that I'm still sticking with because of the empirical evidence. Is someone selling gold into US dollar weakness, meaning when gold should be rallying? Is someone keeping a lid on it? And is also someone also buying it when the dollar is strong? And I think the answer to that is yes. I don't have much proof on that. That's not a conviction idea where I will start putting money into it. But it ties, in my mind, to the Chinese yuan being kept more or less in a band with gold. I'm not sure how the mechanism of it is done. I don't see them as market makers in gold, as sellers of gold and buyers of gold, keeping it in a band with yuan. I think they're market makers of the yuan because it's much easier for them to manage, which is political speak for manipulate, because all central banks manipulate. Sorry, it's just a fact. Okay, so we think the yuan, however you say it, no offense to our Hispanic friends out there. We think that that's part of what's going on. We also think there might be sellers. Central bank watch, important concept here. Quietly and without, and hat tip to Mark Chandler on the writing for this part here. Quietly and without much fanfare, investors' expectations for Fed policy next year is being scaled back, and you're seeing this in what I call the open mouth operations (OMO) of Kashkari and other Fed presidents over the last week. The implied yield for next June and December have eased by around a dozen basis points. So roughly half of the decline can be accounted for by shifting expectations for as early as Q1 19. Point being is they may front load more of the interest rates in the front. Yes, so keep an eye on that. Mexico hiked the overnight rate yesterday by 29 basis points as expected. So far today, gold is, well, let's go through yesterday. Did I miss yesterday? Okay. So you could see, we went through yesterday, but you could see that is a 60-minute chart. You want to know what happened yesterday? You start at number 15. That's the 15th. That's midnight Eastern time. And you can see what the market did. We had a rally into the close on the 14th, stability, and then an orderly and choppy rally higher. Yesterday's trading was not good for us. We strayed off the path. So far today, gold is higher. Let me see where it is right now. Gold is higher, but still underneath the range is trading Futures are trading around 12.17. This is the 5-minute chart for gold today. You could start at the 16th and you can look every 5-minute bar. You can see where the buying came in. It came at 3 in the morning. So maybe there is a buyer back at 3 in the morning. We'll keep an eye on that. Here's the 60-minute, this includes last night's activity. You can see that we're in a very smooth angle higher with, excuse me, I have a cold, with spikes that are rejected. You can look at that as traders or algos fishing for stops, not finding any, and getting slammed down. Or you can look at it as really short-term algos fishing for stops, finding them, and then selling higher. It's a matter of perspective. 240-minute chart. This is what, and I'm saying it in a very broad sense. This is what manipulation looks like, folks. And I'm not saying someone is manipulating. I'm not. This is not a gold is manipulated tinfoil hat conversation. When you see a market moving at a 45-degree angle after that long green candle, that's not normal. Nature doesn't move in 45-degree angles so perfectly. So to me, that is a systematic, orderly buy order that's becoming less patient. That's what that says in a vacuum. In the bigger picture, it says nothing to me, except that there was a long wick on a 240-minute, and we're working through it now. The question is this a bear flag, or is this something that becomes is a buyer and is more impatient and the market rallies? It can be several things. I'll give you the top three. This is a buy order getting impatient and slowly raising their bid. And then we could have a spike higher, followed by a sell-off as whoever is handling the order buys their last group of that order worst, meaning gives a nice last high fill to make the VWAP, volume weighted average pricing of the order, filled at a nice level. I am on the road, so please bear with me. I have other things to work with. Going to the weekly, as it is Friday, you can see that we had a huge downslope followed by a retracement. One could easily look at that as a bear flag being broken. I don't disagree, but the reason I bring up the weekly is because we're tightening again for another move. So it could happen next week. It could happen 2 or 3 weeks from now. But on the weekly, there's nothing really to say except it gives no indication. And I have a huge space again. All right, trade news. Worst poker players ever. All right, after the U.S., this is important. After the U.S. was not formally engaged in talks in recent months, resumption of discussions last week is spun as increasing efforts. The same people, the Trump administration, the people that work for Trump, who negotiated the agreement earlier this year, which was later rejected by Trump, are now leading the talks with China formally. And China, this is how China operates. They formally respond to the U.S. and stakes out its position as it has been the same for some time, and investors are told they are compromising. Uh, you're just being lied to. Are you bullish or bearish gold? Where is the next $30? Wow. Okay. That's Let me get to that. I do want to answer that. I like to answer in the next $10 one way, the next $30 another way. How's that? But that's a good question. Um, let's just put it this way. I think if we see $10 higher and then fade, then I think the next $50 are lower. If we see a $30 lower move today, then I think another $20 lower. So it's and those are opinions, and I'm not trading on that opinion. But I have had a macro opinion, and that was in the low 1200s, 1190 area to get long, and we put that out in a post some time ago. And if you were long, then you should still be long. But that said, from here, I think you're talking about technical numbers and events. And by the events, I mean if all of a sudden China and America get married and all trade wars are off, you could see gold rally. You could see gold rally $30. You could see gold rally 50. $50. It doesn't make sense. Gold isn't fundamentally driven, it is emotionally driven. It is a proxy on confidence in other people. Please don't get me going too long on this on a very simple question. But my feeling is, I'll give you a very big macro feeling, and I'll move on from there. It's all about QT. QT is draining dollars. If Powell continues QT, which I believe he will, you're going to see less and less dollars chasing more and more debt. And that's going to strengthen dollar and weaken gold. At some point, I think the stock market has a crash between 2,200 and 2,000. And then Powell really has to rethink, not this nonsense we're talking about rethinking now, really has to rethink taking the foot off the throat of the dollar. And that means they go from QT, not to QE. QT is issuing debt, reducing their balance sheet while taking dollars off the market. So it's like violently unchanged. Um, so if the stock market goes to 2,000, I think gold moves down harshly with it. And then when QT is changed to what I would call permanent monetization of debt, meaning they opt for a weaker dollar in human terms, even while they're issuing debt, a la paying for Vietnam, then I think you see gold, stocks, and ironically bonds rally. So in 2000, between now and 2019, the $30 straddle for me is a sale either way. In 2019, I could see 50 lower and 100 higher. Not necessarily in that order, but that's it. Opinions are what they are. I do have a macro bullish view down here, but I don't get really bullish until we cross a 12-month moving average. We'll talk about that another day. Yesterday's trades: denial and hope. When going off, your discipline goes wrong. I trade a volatility-based system. I think macro. I trade micro. Yesterday, I tried to trade. I tried to trade technical or front run technical numbers, and I was wrong. So I was 0 for 2 yesterday. So I'm going to go back to what I do best. All right, other money. FX pairs traders we've been talking about Asian FX. You should read this. Well, it starts off with sterling, an explanation of sterling. And then the pick that I have there is those are notes from Goldman's top trades. Do with them as you will. You can either fade them and go with them. It's kind of like this: whenever a bank gives you a recommendation on anything, and I say this without malice, when a bank gives you a recommendation, ask yourself, are you the first client to get the recommendation or the last? If you are Warren Buffett, if you are Paulson, when they liked him, you're getting that information not illegally. You're getting that information first. It's no different than getting a report first before it goes out on a non-paywall system. You're getting that research to say buy the Aussie dollar and the New Zealand dollar versus the euro, and they give you the reason why it's a good trade. It may not be because of fundamentals, but they'll couch it in fundamentals. And if you're a bank that has a prop desk, you're also positioning yourself long because number one, you believe it, and number two, you also know your customer is going to come in and make you right. Then that information gets disseminated to the general public. That would be the mushrooms kept in the dark and fed a load of crap. And at that point, you get the whole, well, if Goldman's saying it's bullish, it's a sale. Well, that's because the information is coming out late. Again, it's what happens when a sales desk is combines with the research to create an environment for traders to make money. There you go. Well, please read that. We're going to have more on the Goldman report later on. Aussie dollar, New Zealand dollar. They believe China's economy is bottoming. Go figure. Outside of markets, lessons involved. Okay, you can read that a little bit about natural gas. All right, what is the delta of an out of the money option with volatility infinity? I'm assuming no one's going to answer because I'm not really providing an opportunity to ask questions. But the answer is, if you said 50, you were right because all out of money options have a 50 delta. They're all simultaneously at the money. What is the gamma of an option with a 50 delta at infinity vol? 0. 50 delta options have no gamma because they are all at the money simultaneously. Sounds bizarre, but it's true. Think of things that way. Conversely, what is the delta of an option with volatility at 0? Well, this is not as easy to answer. You could say 0 or 100. You'd be right. You could also say 50 because you know where volatility is, it's at 0, but you do not know where the market is. What is the gamma? The gamma is also 0, regardless. So think of volatility that way. And this is important for people that are trading natural gas volatility. If you're buying an option that's a put, that's say that used to be a 10 delta with volatility 100%, that same put distant from the at the money is now a 25 delta. Uh, no, it's not, and it's something we used to call at my old firm Weezu, which really is the volatility of volatility, or kind of like at infinity, all deltas are the same. Uh, so as volatility goes up, difference between the 10 delta and the 50 delta option decreases. All options go up to 50 delta at infinity. Conversely, that also means when whatever your delta was is not right. You have to understand the definition of delta. Delta has three definitions, if not more. All of them are not necessarily the same. Definition one, in no particular order: correlation move of the option with the underlying. If it's a 25 delta and the market moves $1, the instrument should move 25% of $1. Definition number two: the hedge ratio of the option. Not necessarily the same as the correlation, especially if you're in a market with stochastic volatility. I'll get into that some other time. Definition number three, and the one most used by retail investors, is the probability that the option will expire in the money. Uh, don't believe it. That's where you have your biggest divergence. You get, if you, depending on the model you use, definitions number one, correlation, and definition number two, hedge ratio. Those can differ depending on the model you use. If you use a model that derives deltas from the at the money, you'll get an out of the money option with a higher, let's say, an out of the money call in natural gas. With higher volatility, with a ridiculously low delta, and you'll say why, and I'll say we'll talk about it some other time. If you use a model that creates deltas independent of at the money, that creates deltas based on on skew, not the stochastic process of skew, you'll get an out of the money delta that more reflects the fact that it knows volatility will go up if the market goes up. So that equidistant out of the money call in natural gas on one model will have a 15 delta, on another model will have a 25 delta. So when options traders say I am flat but I feel long, that's because they know volatility is going to move up if we go higher or down if we go lower. So keep that in mind. Global equities, you can look for yourself. We'll talk more about that in detail during the 8:30 Gold Fix. It's 8:18 right now. And a big dead space. I hate this blog. It's my fault. I did something to it. Stock markets. Well, the VIX is up. Stocks are down. VIX is up on a Friday. Um, Not really sure why. Blame it on tick data because we don't really know much about that yet. All right, oil is up. Um, I have CL1. That is the front month future. CL Jan 19. They should be the same, but they're not. And then U.S. oil, which is the cash market. I have a delayed futures on this screen. I'm on my phone. I don't trade with this. And then there's Bitcoin. We're not going to talk about Bitcoin except to say the lower it goes, the more of a buy it is. Not because I think it's, well, anyway, we're not talking about Bitcoin. We're done with that. All right, technicals via more analysis. All right, so here we go. All right, let's just look at his two numbers, his range. Right, this is how I look at his stuff to begin with. Sell against or into 1234. Right, on the upside. So that's a lot of room. There's really not much he has there. Look for possible minor exhaustion 1227. All right, downside. Get short on a decent penetration below 1214. Okay, so he's widening his levels now. Um, um, I still like his number from yesterday. 1217 was a number yesterday, and we are kind of struggling with that around today. Uh, uh, Hemming and hauling around the 1217 area. Please note that while gold is higher, $3.40, depending on when you look at settlements, $4. Silver is unchanged to lower. Palladium is up. What's new? Platinum is a little bit lower. Copper is a little bit higher. And the dollar is slightly lower, trading 96.89. Today's VBS RTM levels, we'll go through that in a second. Here's the miners that I watch. There are other miners to watch, especially the smaller miners. That's where the money's made if you know what you're doing. But I watch these miners because of industry consolidation. Um, and gold mineral mining, uh, basically, they're telling you to get long the industrial metals with a target of 1400, stop loss at 1100. The joke is that any bank that gives you a stop loss level to sell at 1100 is probably 1095 bid for everything you're selling. So there you have it. Trade accordingly. Okay, what would you pick first or second? This is an interview riddle. I figure I should play to my strength. Those who can't do teach, I can do. I happen to be better at teaching. Um, well, it's just more fun. My track record is pretty good trading, but for teaching, there's a round table. You have an unlimited amount of quarters, and it's you versus another person, and you're going to say whoever puts a quarter on the table last wins. Do you want to be the by putting on the table, meaning it has to fit completely on the table, no stacking, no overlapping, just completely cover the surface of the table with circles. The question is, would you want to go first or would you want to go second? And think about that for a second. Here's how I solved that when I was asked it when I was interviewed. I tend to reduce things to the absurd. Um, in my mind, I made the quarter as big as a table. And then I asked myself, all right, do I want to go first or second? Knowing that you're dealing with a circle, you're dealing with pi, and knowing that you're dealing with pi, uh, uh, doesn't matter how big a circle is, the dimensions around it matter. So think of it that way. If the table were the size of a quarter, or the quarter were the size of a huge table, circles don't matter. They're all circles. They all take up the same space, relationship wise. Would you rather go first or second? Meaning the first person who puts down the quarter last wins. And I think you should have an answer in your own mind by now. Um, okay, here's yesterday. Don't call it a short squeeze. Let's go to very quickly. Let's go to the markets. See where we are before we hang up. All right, the dollar is a little bit softer. Gold is now above 17. Spot gold is above 17. And let's look at that on an hourly basis, see if we can give you some numbers for trading today, because got to be honest with you, on the hourly basis, that's not a signal. That's an orderly rally. That's low volatility. I have nothing on the hourly. In gold, let's see if that's on the 4 hourly. Well, the 4 hourly gave a weak signal. Again, something I wouldn't trade because it was too wide to begin with. Okay, I know about the alerts. It's breaking my technical levels, which I don't care about now. Let's look at silver because that seems to be more interesting. We're looking at spot silver right now. On the 4 hour, it looks like gold uh, uh, with bigger candles. On the hourly, it's been nice. It's been starting to inhale and exhale. Okay, here we go. Silver after the first hour today. So that would be at 36 minutes. So at 9, after 9, before 10, I have looking at spot 1430 on the upside, 1426 on the downside. That's really tight and that's really nice. It gives you two bites at the apple, whether you want to buy, get stopped out, and buy again, or buy, get stopped out, and reverse. Those are nice risk reward numbers. I do not think we will be between 1426 and 1430 on the day. The actual numbers right now for the next 30 minutes are 1431 and change and 1425 in spot. If you need to know what that is in futures, happy to oblige because you don't need a real-time chart on this. On the futures, it looks like we're going to have to wait another hour or two, but it's 1430 and change and 1423. I'm focused on silver today. Look at how it inhales. That means narrows and then widens and inhales. The market has changed personality since the 14th, since that double bottom on the 14th, which was not false. It was a good breakout lower that you traded on and then reversed. Watch silver today. If silver rallies, maybe gold will follow. Who knows? But I like silver for my system today, and I'm only trading my system today. None of this technical nonsense. I'm just not good at it. Look for you in the chat room. Please stay with us. As you can see from my note there, The AM roadmap is coming up with Larry at 8:30. It's 8:25 now. Again, be aware that it's Friday, and also be aware that the market tends to have violent moves on Friday, uh, uh, frequently after um, the 2:30. There's an algo that I think comes in a lot there. But note that we did have a buyer during London hours at 3 a.m. Pay attention to that. That means the buyer's back. Who's that buyer? I don't know. But have a great day and good luck. And always have quarters on you or very small tables in your pocket. Peace.